Okay, good afternoon, everyone. Welcome to another edition of My Trades Beyond Connections, our bi-monthly session where we answer your questions about the stock market. I am Bess, one of the senior analysts for Abacus Securities, and I'm joining you virtually today. But in our studio, we have
Hi guys, Ray here. I'm one of the analysts covering the company, and I might say I'm one of the technical analysts. Good afternoon, everyone.
okay. Okay, it's been a wild week, past few days for the market. From the collateral damage from the index rebalancing and several economic data coming out over the past few days. There's a lot to talk about. But while we wait for your questions, just want to greet our Suke. Hi, LB De La Cruz, and hi, China. Um, and while we wait for your questions, I see any outlook for the PSEI tomorrow or even next
Now
week?
let's have a quick look at the index to show the viewers what has happened recently. So as you can see, there's been technical damage here, broke through the ascending channel, but was able to just try to maximize this. Quickly broke down from this price level about 5,900, but quickly went back up. So now you're a little bit on the whole top of the channel. So expect some selling, which already happened today. So should pull back and try to base up from here. There's another chart that I want to share, which includes the less liquid names, which is the all share index, which looks actually a lot better than the KCI here, which is close to actually 19% from the lows. So given this index, there are some names probably not part of the index that are doing a little bit better than them relatively. So that's the technical picture for now. And let me know if you want to see any charts of any stocks. Okay.
Okay.
Yeah.
So, aside from the index rebalancing, which we saw CBC and ERIT entering the index while nickel and Wilcon left or were removed, over the past few days, we've also had some economic data. So, yesterday, inflation came out. This was a little bit higher than what the market was expecting at 2.9%. We wrote about that in today's short takes. But if you haven't had the chance to read, it was mostly driven by higher prices of vegetables and meat. And we are still expecting inflation to remain manageable over the next few weeks, and we're actually expecting a cut from the BSP when it meets next week, February 13, just before Valentine's Day. Also, GDP numbers came out since we've last had our Beyond Connections episode. Also, quite a bit disappointment coming in lower than market expectations at 5.2%. Um, Also, driven by lower consumer spending, which was probably affected by the relatively higher inflation compared to the previous months during the fourth quarter. Also, lower investments in durable equipment and capital formation. Uh, we have yet to see or don't have yet any relevant data. It's still early in the year to look at first quarter GDP for this year, although we have some preliminary information from the manufacturing sector, which saw also some weakness compared to the previous month, which can be expected due to the calm down from the holiday season. So this GDP number will probably also be taken into account by BSP next week when they conduct their monetary board meeting. While we wait for questions, any particular stock you're looking at, Rainer or IC? But
Actually, those stuff that Randy covers that I just recently mentioned to him, it's actually the chart of BNL. Not the one. And now so has the uh, this pattern has been here for quite some time. It looks like a major reversal is taking place. This usually resolves bullishly. Is this a topic this year, Ring?
Yes, I see.
Yes,
It's,
it's a
DNL is actually one of our topics, and I'm glad I see mention of the, I guess, the a long consolidation or even sideways trend for DNL, and I think that kind of speaks volume of what is happening to the company. And just today, we did see a good volume spike and price spike as well, because I think investors reacted positively of the news that it came out today, where somehow they reassured investors that their business, especially on their imports, remain intact despite the possible challenges with the trade wars that is happening currently. And they do expect exports or demand for their exports to continue to be higher, especially with their new Batangas plant. Customers are they do expect customers to come in more this year, since a lot of them were certifying their new plant last year. And apart from that, they do have the drivers of the biodiesel blend that they already alluded to, that were better than expected in Q4, and we should see more of the impact this year. And later this year, in Q4 of 2025, we should see another boost in the biodiesel blend, which again should be positive for DNL. So I see mentioned that he is seeing a reversal, uh, reversal a reversal pattern for DNL, and that could be a story uh, that is interesting and we could be looking at for this year, especially when they come up with results in April and May. We should see some indications on how the year will progress for DNL. But we are positive again on the company.
Okay, there are a couple of questions from LB De La Cruz on the comment box. Um, Says he or she, not sure, is not invested at the moment. And at what levels can we say that the index is reversing from bearish territory? I see.
I'm assuming it's the index, no, that people want to know if it's reversing from bearish territory. So personally, I would look at just this volatility back here. It's closer to, if you're more of a classical chart, it's probably a break above this downtrend line here at 6,300. But the more mechanical level of the volatility stop would be about 6,400. So if it's about 6,400, there may be more influx of more buying as supply demand dynamics shift. Yeah, hopefully that answered the question.
Okay. He's also asking about our property names like RLC and SMPH. Maybe you can comment on SMPH, but for RLC, we're not keen on the stock since it should take some time for investor confidence to return after they had some sales cancellations in 2024. Um, so we don't recommend RLC at this time.
And then for SM Prime, it is one of our preferred names in the property sector, since they do have a significant chunk of their portfolio on the mall side, which is the less impacted sector or the segment within the property sector that is doing very well compared to the offices and the residential side of the business. And that's why, and ano lang pala, and it also reflects the consumer economy that should be tilting more on the positive end, SM Prime would be the prime candidate to benefit from that. And we did see a pretty huge bounce over the past days for SM Prime. And since it has traded close to actually three standard deviations below its 10-year mean, it was basically ready for a bounce, which we already saw in the past days. Though today I think it closed a little lower, but we still remain positive on SM Prime compared to its peers, compared to RLC to be precise. Maybe I think can give more color on the charts.
Let's have a look at S&P. So as you can see, S&P has been in a declining, quite a wide range descending channel. If it briefly went through the channel, it was oversold. If you see the oscillator as well, it's oversold here. So my expectation would be for just basically possibly a repeat of this channel here. So probably closer to a test of maybe 31.55 by what's this name? Maybe by May of this year, hopefully, for a nice counter trend rally for S&P.
Okay, and another question from LB. How about consumer names like Monde? Is it still a technical bounce or a
Okay.
technical bounce na tinindua?
Yeah, I see.
Technical bounce.
Well, while IC is checking the chart, Monday we continue to be positive on it, especially if you compare it to its peer in URC. URC's share price has also gone a similar trend, a downtrend to be exact, but it has performed much worse compared to Monday. And Monday, we do expect it to bounce faster than URC because earnings from Monday is likely to be more positive and it's not going to see the same headwinds as URC. Uh, com- uh, with its raw materials not really elevated at the moment for Mondes, namely wheat and palm oil prices. So for 2025, don't really expect a lot of downside in terms of earnings for Monde, apart from its meat alternatives business, which continue to lag at this point. So we can show the chart for Monde, which also saw a bounce.
So the chart for Monde, the technical picture is a bit challenging to read. It already bounced, so it's testing the 50-day average now. It's hard for me to see what's happening. Probably needs more time to trade sideways to see what we have in store for it technically. You probably in the short term look to sell as close to this resistance level here. Check the level about 840 to 849 and see if a clearer picture emerges for Monday.
Okay, thanks. I see. Maybe we can move on to the next question. Here,
Let's take down from Norman.
yeah, let's see. Is it better to invest on bank stocks or property REITs? Which particular stock would be a good target either for banks or REITs, or are both sectors not good investment sectors at this time? So maybe best, and we can share a little after this.
Yes, for banks, our outlook at the start of the year or even late last year in early December was only neutral, since we were expecting that interest rates would come down much faster than they have, and so would start to eat up some of their revenues as net interest margins would also come down. However, um, interest rates have remained sticky for the past few months, And with recent pronouncements from the BSP governor that the initially expected rate cuts of about 75 to 100 basis points this year be less, would actually be less by as much as half to about 50 basis points for the whole of 2025, and also with expectations that the reserve requirement ratio would be reduced by another 200 basis points this year, with the ultimate goal of having that come down even to zero um, before BSP Governor Remolana's term ends. These are all quite positive for the banks, since with interest rates remaining high, net interest margin compression is going to be further delayed. And with the lower reserve requirement, there would be more liquidity that will be released into the system. And since the banks no longer have to park these funds with the BSP where they don't earn any interest, they can lend it out and earn a higher and earn on those funds, or they can also simply place them with the BSP and earn the benchmark rate, which is better than as reserves that they where they earn nothing. So this will continue to delay or altogether halt the NIM compression that we were expecting. So actually, the outlook for banks is improving. Um, that said, since we do still expect a rate cut coming next week and 50 basis points for the rest of the year, for the whole of the year, we will still see uh, we are not likely to see net interest margins expand. It's only that won't see them compress as we earlier expected. And so if you're looking at investing in the banking sector, we would prefer to do so selectively. So we would choose the ones that have higher net interest margins to begin with. So these are typically the ones um, that have a larger proportion of their consumer loans to their total loan book. So this would be Union Bank and BPI. For BPI, for the big cap banks, BPI actually for the longest time has had a relatively small proportion of the loan book on in consumer loans, but in the past year or two, they have shifted their focus, which uh, really ramped up with their acquisition of Robinson's Bank, which was booked last year. So with that acquisition, they are now um, accelerating their expansion into the consumer space, and this will lead to better NIM trajectory for them compared to their competitors, BDO and Metrobank. We've already seen some of this impact in the third quarter and fourth quarter numbers, with their NIMs not going down as much as the other two banks. Meanwhile, Union Bank is already now reaping the benefits of their acquisition of the Citibank portfolio way back in 2021, with no longer being burdened by integration costs. We already saw 100% growth in their third quarter net income. Um, Also, in the fourth quarter, both PPI and Union Bank actually just reported this week their fourth quarter income, and for Union Bank this for the fourth quarter they continued that strong growth by 200%, and we are seeing the impact of higher NIMs, with most of the income growth coming from net interest income revenue growth in the fourth quarter. So we will continue to see such strength in both Union Bank and BPI's numbers in the next two quarters. Um, but in terms of valuations, Union Bank would actually be cheaper than BPI. Um, so if you are looking to buy into BPI, maybe we would wait for lower levels. Although if you are a long-term investor, it you can start um, accumulating at current levels as well. As for the REITs, Maybe Rainer can also add to this, but we are still positive on the REITs. We are partial to RCR and CREIT, which have higher yields compared to the other ones. CREIT has a more stable revenue stream as well, so which would make the yields more sustainable for the rest of the year compared to other REITs that are more dependent on uh, perhaps more revenues and office revenues. Anything to add, Rainer?
Yeah, I think Beth already captured most of it. But I want to focus as well. One of the questions here. So, what stocks can be resilient at this point, at least from the fix? And I think REITs is considered one of those resilient because I think if you observe the market these days, given the volatility, I think a lot of the investors or a lot of traders are looking at yield at this point. So those high yielding names have more or less been favored, which is why the likes of Siri, RTR, AREIT, and even from our picks, we have Tel, even MWC, those with high yields, they haven't really moved towards the downside. Actually, they have mostly been moving upwards. That's why we do consider them the at the we consider them as more of the resilient names. And given the trajectory of the rates, and although ano pa rin naman, the bond yields continue to be elevated, but it's expected to move more to the downsides, especially with rate cuts on the horizon. So we expect these names to remain resilient or at least less volatile compared to the banking names. Yeah. Hope that answers question, Norman and Gina. Maybe you can take a few more questions since we are running out of time. I think we have time for one or two questions. We can scroll a bit. Okay, ice cream analysis on DNL. We did take a look at it already. Just rewind a bit. Thank you. Um, okay, and I think the last question we can take a look at a question by LB De La Cruz. So looks like foreign investors are coming back for the past few days, especially with the PSEI names. Yes, and I think the ano pa rin here is the main catalyst here remains to be the rebalancing that has occurred just last Friday and might have had some of the uh, residue during Terra in these days. And I think foreign flows today at least have been less compared to the past 3 days. So we aren't sure yet if they are back, or they probably won't be back with a vengeance, especially given the outflows that they've done over the past 2 years, and especially last month. Last month was pretty bloody for foreign flows. But we do expect some fluctuation, some big fluctuation, especially with the MSCI rebalancing coming up in about 2 weeks. Then FTSE in about a few more weeks after that. So we don't really see them as the catalyst for the PSEI. And as we mentioned before, that even without the buying from foreign, we do see the PSEI moving up. Well, at least more than the foreign selling, for instance, at that. So, Beth, do you have anything to add to that?
Yeah, nothing much more to add. Most of the foreign buying This week has been due to the index rebalancing. I think a lot of the foreigners were um, did not weren't able to get into the ones that are entering the index early enough, so they had to catch up with buying those names, and with the resulting drop in the rest of the index members. Um, yeah, they probably saw just an opportunity for trading. So we don't. It's still too early to say whether they're really back for good. So um, sorry, it's not it's not a really optimistic view, but we have to be realistic. Uh, although I see any observation on foreign buying.
I haven't been up to date on the foreign buying recently, so um, nothing to add there.
Okay,
Okay,
so
so
think we can wrap up. Sorry, guys, since it is the earnings season, we do have our HI reporting, and that's why we are ending a bit early since they are holding their earnings results later today, and we do expect more of the companies reporting soon. With also Globe coming up tomorrow. So these names, again, just a reminder to everyone, once they announce, they do tend to have an impact to share prices. And it's always important to stay updated with the market, especially given the volatility and movement these days. So if you want to be updated, please do sign up with us. Sign up with an account with us, and you will be able to receive our reports daily. So that's it. Thank you guys for tuning in, and see you again in the next 2 weeks or so.